Hello everyone. Today we will solve the question paper of 2018 February for 12 marks, that is section D. In the last video we solved for 6 marks 2018. In continuation now we are doing 2018 12 marks questions. So before I start working out the problems, I request everyone you please subscribe yourself and share among your friends, so that if you press the bell icon button you will get continuous notification. Thank you. We will start working out the problem. The first problem under section D, 26th problem, journalize the following transaction. Actually transactions would have been there, transaction. Okay. On January 1st, 2017, business started with cash 1,50,000 and goods 50,000. Here you are not supposed to write goods, you are supposed to write stock. Right? So it is a compound journal entry, the first journal entry compound entry, because he is investing into business, cash as well as goods. Then how we will write the transaction, that is journal entry 1/1/2017. What all coming in? Cash account debtor 1,50,000. Stock account debtor, you can say it is goods for your reference, but in the examination if you write stock, that is enough. 50,000 to capital account 2 lakh, and you are supposed to write narration. Business started with cash and goods. That's all. That is the first journal entry. Finished. This is compound journal entry. Why? There are 2 debits, 1 single credit, which is called as compound journal entry. Next transaction. January 3rd, purchased goods from Harish. So 3/1/2017, purchases account debtor 30,000 to Harish account 30,000. Purchased goods from Harish on credit. I hope you remember, narration is called as a brief history of the transaction. Then next, 8th January, cash sales. It is very simple. Whenever you say cash sales, that means goods sold for cash. Goods sold for cash is also called as cash sales. So date is 8/1/2017. That is cash account debtor 25,000 to sales account 25,000. Goods sold for cash. Very simple narration. Next, 10th, cash paid to Harish on account 15,000. So you should refer here. You have purchased goods from Harish earlier for 30,000 rupees. Now you are paying him how much actually? 15,000 out of that 30,000. So which date? 10th. 10/1/2017. Harish account debtor. Harish account debtor 15,000 to cash account 15,000. Part payment made to Harish. Part payment made to Harish. Next, 18th, deposited into bank. That means you have deposited into bank. It is very simple. 18/1/2017, bank account debtor 5,000 to cash account 5,000. Cash deposited into bank. Narration is over. Next, 20th, drew cash for personal use. Personal use means it is called as what actually? Drawings. So 20th/1/2017, drawings account debtor 5,000. Drawings account debtor 5,000 to cash account 5,000. Cash withdrew for personal use. Cash withdrew for personal use. Next, cash paid to Harish in full settlement of his account rupees 14,700. Say, you should know that earlier we purchased from Harish 30,000. We have paid 15,000. The remaining was 15,000. Now out of that 15,000, we are paying only 14,700. That means instead of paying 15,000, we are paying only 14,700. That means we are getting a benefit or discount of rupees 300. This discount is called as cash discount, which appears in the books. So what you have to write is 25/1/2017, Harish account debtor, leave the amount first. You are paying cash, how much? To cash account 14,700, to discount account 300. 14,700 plus 300, it comes to 15,000. So instead of paying 15,000, we have paid only 14,700. We received a benefit, that is discount of rupees 300. So what is the narration? Cash paid to Harish rupees 14,700 and received discount of rupees 300. received discount of rupees 300. Next, goods sold to Nitesh. Goods sold to Nitesh on 27 7,000. So 27/1/2017, Nitesh account debtor. Nitesh account debtor 7,000 to sales account 7,000. Goods sold to Nitesh on credit. On credit. On credit. Next one, 28. Received cash from Nitesh, how much? 6,800. We have sold him 7,000, but he is giving 6,800. It is implied that we are giving him a discount of rupees how much actually? 200. So what is the narration and transaction or journal entry we have to write? We will write 28/1/2017 cash account debtor 6,800, discount account debtor 200 to Nitesh account 7,000. Cash received from Nitesh rupees 6,800 and allowed him discount of rupees 200. Very simple. So next, rent paid by check. Paid by check means the amount will not be deducted from cash box, it will be deducted from bank account. So 30th/1/2017, rent account debtor 1,500 to bank account 1,500. Rent paid through check. There ends the matter. Then what you should do is, you should put a total here. Put a total here. Total is 3,10,500. 3,10,500. 3,10,500. This is your first problem of section C. Next problem, 27th problem. I have written 27th problem. Enter the following transactions in the purchases book and purchase return book and post them into ledger accounts. First, we will enter in the purchase and purchase returns book. You should know purchase and purchase return books are called as subsidiary books. What is subsidiary book? Subsidiary book is also called as journal, but it is a sophisticated journal. So we are now doing sophisticated journal. Earlier we did journal. Now we are doing what actually? Sophisticated journal. That is called as purchases book, purchase returns book, sales returns book. So it is there. I have written purchases book, date, inward invoice number, name of the supplier, ledger folio, amount. When we will write ledger folio? When it is journal only, we will write ledger folio. Otherwise, if it is account, we will write what actually JF, journal folio. Then purchase returns book, date, debit note. So here debit note, because we are returning the goods for that purchase returns book, name of the supplier, ledger folio, then what actually amount. Now let us enter one by one in the purchase book as well as purchase returns book. 1/7/2017, purchase of the following on credit from Ratna Traders, 25 shirts at rupees 300 per shirt, less 10% trade discount. Whenever it is trade discount will not appear in the books. So very simple. Date is 1/7/2017. Invoice number has not been given. Don't worry. From whom you are purchasing? Ratna Traders. Ratna Traders. But better you write in the bracket how much you are purchasing. 25 shirts into 300 is equal to 7,500 minus 10% discount. That means 750 is out. So remaining is 6,750. 6,750. Next, July 10, purchased of the following goods on credit from Bombay Fashion House, 10 fancy trousers at 500 per trouser. So 10/7/2017, purchased from whom? Bombay Fashion House. Bombay Fashion House. How much you are purchasing? 10 fancy trousers, rupees 500 per trouser. 10 into 500, then it comes to 5,000. 5,000. Next, 15th July, goods returned to Ratna Traders, 3 shirts at rupees 300 per shirt. Here there is an ambiguity. Actually, when you have taken it for discount, when you are returning also, it should be a discount only as per the system, which has not been mentioned. But let us assume we are returning like that only. Then we'll come back to purchase returns book, that is 15/7/2017, right? Goods returned to Ratna Traders. How much we are returning? We are returning 3 shirts. 3 into 300 is equal to 900 minus 10%, take it out. That means 90 rupees is out. So it comes to 810. 810. Even if you write directly 900, that no matters. But still, if you are a perfect accountant, you are supposed to write like that. Next, 25th July, purchase of the following goods on credit from Bride Palace. 25th July. 25th July. You have purchased following from Bride Palace. Write Bride Palace. Bride Palace. What are that you are purchasing? 10 fancy lehenga at rupees 2,000 per lehenga. So 10 into 2,000, it is 20,000. It is 20,000. Finish. 28th July, goods returned to Bride Palace, 1 fancy lehenga at 2,000 per. That means one piece was what actually defective or something else. So 28/7/2017, that is to whom? Bride Palace that is 1 into 2000. Earlier we have not taken any discount, so it is original price. It has been written. Next, July 30th, purchase from Zolta on credit 10 jackets at rupees 1000 per jacket. 30th July, 30th July, purchase from Zolta on credit 10 jackets, 10 into 1000, it is 10,000. 10,000. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. For your reference, you please calculate the number of transactions or items which has been entered or not. The total is 41,750. Total purchases is 41,750. Then total purchase returns is 2,810. Now they have asked what actually post them into ledger also. We have done purchases book and purchase returns book. Now we will open one by one. On 1st July 2000, purchase of the following goods from credit from Ratna Traders, 25 shirts, 300 per shirt, less 10% trade discount. On 1/7, their debit 1/7/2017 by purchases 6,750. Finish. Then purchase the following goods from credit on Bombay Fashion House, that is on 10th 10/7/2017 by purchases 5,000. Then 15th July, we have returned 3 shirts to Ratna Traders. So date is 15/7/17 to purchase returns account. How much? 810. Then purchase the following from Bright Palace, 25th 25/7/17 by purchases it is 20,000. Then goods returned to Bright Palace, that is 2,000, that is on 28/7/2017 to purchase returns account that is 2,000. Then 30th, purchase from Zolta, that is 30th July 17, that is by purchases from Zolta, it is 10,000. Then it is very simple. When you say purchase, that total comes to 41,750. Now that 41,750 will be written in purchases account on the last day of the month, that is 31/7/2017. You write to sundries as per purchase journal as per purchase journal. Total you write 41,750. In this similar fashion, you have returns 2000 plus 810 is 2810. 31 7 2017 by sundries as per purchase returns journal 2810. They have asked us to post them into ledger. We have posted them into ledger. Here I have not written date particulars JF because you know that here it is there. It is what actually common, but in the examination you have to write, you have to fill it up without fail. As a student you are supposed to write. Here I have shown the concept. Oh, probably you might have not seen. Now I'll just explain again. Date particulars JF amount, date particular JF amount. I have not written here. You have to write it in all the columns without fail in the examination. Now we'll take problem number 28. From the following particulars, prepare bank reconciliation statement as on 31/3/2017. What is reconciliation? When there is a difference between the cash book balance and passbook balance, we need to answer that one, why the difference has come. Let me get you a small example. When 10,000 rupees has been deposited into a bank through check, in my book say that 10,000 is there in the bank, but it has not been credited in the bank. These transactions will happen only at the end of the year. That means accounting period is 1st of April 2000 to 31st of March. If you have done the transaction on 28th of March, that it might have done what actually on 1st of or 2nd of April. Then there will be a difference between cash book balance and passbook balance. For that we prepare that reconciliation statement. For that I have one small hint so that I can show you calculation and we can prepare the statement. It becomes very easy for you. If you prepare that statement, then prepare BRS. You feel very happy hoping that. So first transaction, bank overdraft as per passbook. We are coming from bank overdraft as per passbook, means we are coming from passbook to cash book. Passbook to cash book. Within bracket you write overdraft. Overdraft. What is overdraft? When you are overdrawing in your account is called as overdraft. You have 10,000 rupees balance in account, but you have drawn 25,000. That means now you have to pay to the bank to the extent of how much actually? 15,000. That is called as overdraft. So first transaction, bank charges debited in the passbook rupees 500. Bank charges debited means actually we have to pay. That means passbook balance is showing that you have to pay more, but cash book balance is showing less. You are coming from passbook balance to cash book balance. Cash book balance is showing less means you should deduct, which is called as less. How much you have to deduct? 200, which is called as bank charges. Bank charges. Next, check recorded in the cash book but not sent to the bank for collection. Very simple. Check recorded in the cash book. Check recorded in the cash book means actually overdraft is there. Overdraft means when I have deposited a check, then it is very simple. That means my overdraft amount has reduced. But in the passbook, that means not sent to the bank for collection. It has not been sent to the collection at all. Then what you have to do that once again, passbook balance is showing what actually more, but cash book balance is showing less. Then what you have to do? Less. That is 2,500 check not sent to bank. Next, direct payment in the bank by customer 4,600. Somebody has to pay the amount. He did not find time. Then that fellow, what did that? He paid to my account directly. When he paid to my account directly, what happens? My overdraft balance automatically comes down. That means passbook balance is showing less, but cash book balance is showing big more because I never knew. So what is that? Whenever the sign is showing increase, it is called as add. Add how much have to add? 4,600. That means direct deposit. Direct deposit. Next, check issued but not presented for payment. Whenever I issue check, then what happens? My liability will increase in the bank. I have to pay already 10,000 to the bank, then still I have issued a check for 6,980. That means naturally cash book balance is showing more I have to pay to the bank, but that has not been presented for payment, means passbook balance is showing less, but cash book balance is showing more. Then what you have to do is add. Add how much? 6,980 check issued. Check issued. Next, interest credited by bank. Interest credited by bank means what actually? I might have done some investment. For that, interest has been given by the bank. How much they have given? 100 rupees. When they give 100 rupees, I have to pay 10,000 rupees assuming. They have given interest of 100 rupees. That means now I have to pay only 9,900. That means my passbook balance is, that means overdraft balance is showing less. But cash book balance is showing more. Then what I should do? Add. Add how much? 100. That is interest credited. Interest credited. Then last one. Insurance premium paid by bank. Insurance premium paid by bank is very simple. When your bank pays premium, your overdraft balance, what happens actually? Increases. Say automatically, which is called as standing instructions. We'll call it standing instructions. So when they pay on behalf of me, naturally in the passbook, my OD balance is showing more. Whereas in the cash book, it is showing less because I have not taken into account. So less, how much? 2,500, which is called as, what do you mean by, that is insurance premium. Insurance premium. Now it is very simple. You have done which one you should add, which one you should deduct from your passbook balance. Then you will get what actually the cash book balance. So this is very simple, which can be done for all the problems for regular passbook balance and for what actually overdraft balance also. Now we will work out in the statement how it will be done. It becomes easy if you learn this technique. Bank reconciliation statement as on 31/3/2017. Here you say that particulars, amount inner column, amount outer column. That's all. Now take us one by one. Balance as per passbook, that is overdraft is 20,000. So you do one thing and one thing. Here how many adds are there? 1, 2, 3. You can say that 1, 2, 3 adds are there, 1, 2, 3 less is there. So let us leave some space like that, right? Add then less. So first transaction, bank charges debited in the passbook. That means it is less. Number 1, bank charges debited in the passbook but not in cash book. How much? 500. Put it in the inner column. Then check recorded in cash book not sent for collection to the bank. So very simple, check has been sent. We thought that it has been already deducted. So very simple, again deduct check for collection, recorded in cash book but not in passbook. 2500. Next, direct payment in the bank by a customer, 4600. He has made the payment that which has not been entered. So add direct payment credited in the passbook but not in cash book. How much? 4600. Next, check issued but not presented. Check issued. Whenever you issue check, then you think that the debit balance has what actually increased. So check issued entered in the cash book but not in the passbook. How much? 6980. Next, interest credited in the bank. So interest credited means it has reduced our OD but no transaction in the cash book. So interest credited in the passbook but not in cash book, 100. Next, insurance premium paid by the bank, 2500. So insurance premium entered in the passbook but not in cash book. How much? 2500. Now very simple, when you add you will get everything. So when you add it is 11,680. Then it comes to 31,680. Then total deduction is 5,500. Then you will get 26,180. This is balance as per cash book. That is OD. Once again, that is overdraft. I hope in this method you feel easy. We will take another 2 question problems. It is there. There also I will explain, and after that in the tips I will get you in detail once again. Now next problem is 29. On 1/4/2013, Ajit Limited purchased a machine costing rupees 50,000, respect rupees 10,000 for its installation. On 30th/6/2014, it purchased a new machine costing 40,000. On 30th/9/2015, the machine which was purchased on 1/4/2013 was sold for rupees 42,500. Depreciation charged annually at 10% per annum under straight line method. That means every year depreciation amount will be one and the same. Accounts are closed on 31st March every year. Show machinery account, depreciation account for the first 3 years. Whenever you have a problem like this, before working out machinery account, it is better always you prepare the calculation part. Otherwise, it becomes tough for you. So, first, what you have to do is you make two systems. One is machinery 1. This is called as calculation. Machinery 1. Here, machinery 2. If you make this calculation, then it becomes damn easy for you to write it in the examination. So, you have purchased on 1/4/2013. 1/4/2013. How much? 50,000 plus 10,000. It comes to 60,000. That means 50,000 is cost plus 10,000 is installation. Installation is also part of cost. Then it becomes actually 60,000. So every year accounts closes on 31 March. That is 2014. So 31st March less depreciation. How much percent? 10%. 10% of 6,000. 10% of 60,000 is 6,000 minus 6,000. Then 54,000. After depreciation is 54,000. Now, the next is on 30th/6/2014, it purchased a new machine costing rupees 40,000. On 30th/9/2015, that means now still we are in 2014. So, this is the balance on 1/4/2014. That means you have one more year, 31/3/2014. Again, less depreciation, same 6,000 rupees. Then it becomes 48,000. That is on 31/4/2015. I'm sorry, 31/3/2015, 6,000. Then it becomes 48,000. You have sold the machinery on which date? 30th/9/2014. So this is on 1/4/2015. So 30th/9/2015 less depreciation from April to September. April, May, June, July, August, September. How many months? 6 months. So 6 months means 48,000. You are supposed to take how much actually? 60,000 into 10% into 6 months divided by 100 into 12, because half year straight line method. Then it becomes 3,000 rupees. Then the balance is 45,000 as on that date. 45,000. Out of that 45,000, where you have sold that machinery for how much actually? That is on 30th/9, which was sold for rupees 42,500. So less bank That means sold 42,500. That means 45,000 worth has been sold for 42,500. That means you have incurred a loss of 2,500. You have incurred a loss of 2,500. Now, machinery 2. We have purchased on 30th 6 2014. 30th 6 2014. It is 40,000. 40,000. Then 31/3 2015 less depreciation at the rate of 10%. 30th 6 means what actually? It is 1/7. That means July, August, September, October, November, December, January, February, March. That means it is 9 months. Then what you should do? 40,000 into 10% into 9 months divided by 100 into 12. This is one way. The easy way is 10% of 40,000 is 4,000 per year. Half year is 2,000. Other half is 1,000. So 2,000 plus 1,000, it becomes 3,000 straight away. You can calculate simply also. Then it becomes 37,000. Then this is on 1/4/2015. Then 31/3/2015, 31/3/2016 less depreciation at 10%, it is 4,000. So it is 33,000. It is 33,000. It is on 1/4/2016. So the balance of machine on 1/4/2016 is 33,000. Now it is very simple. When you have all this calculation, just fill this calculation in your machinery account. That is all. That's how you should work out. Now let us prepare machinery account. Machinery account. 1/4/2013 to bank account or cash account, whatever it is, 50,000. Again to bank account, that is installation. Installation is also part of cost, that is 10,000. So total it comes to 60,000. 31/3/2014 by depreciation 6,000. By depreciation 6,000. By balance carried down 54,000. So total is very simple, 60,000. 60,000. Then 1/4/2014 to balance brought down 54,000. 54,000. In the same year, 30th 6 2014, you have purchased one more machine for rupees 40,000. So 30th 6 2014 to bank account, that is new machine you have purchased for rupees 40,000. 40,000. Now 31/3/2015 by depreciation account. By depreciation account. Now I'll show you how you should calculate. Earlier we have done that one. Here 6,000 rupees is there and here 3000 rupees is there. 6000 plus 3000, then it comes to how much actually? 9000. So we have to write depreciation 6000 of the first machinery, 3000 of the second machinery, total depreciation is 9000. Then by balance carried down, we have to find out how much it is. 94,000, 94,000, 000, 85,000. So 85,000 is what actually balance. You can cross verify also. You can cross verify. How? Here on 1,415 it is 48,000 is there. Here it is 37,000 is there. 8 plus 7 is 5. Then 5 plus 3 is 8. That means it is one and the same. That means you can cross verify from your calculation to your what actually the account. So now 85,000. So 1/4/2015 to balance brought down 85,000. Now there are so many things in 2015. What are that so many things? Very simple. We'll just show you back the calculation. On 30th/9/2015, you have sold that machinery, but you have depreciated how much actually? 3000 of the machinery 1. 30th/9/2015 by depreciation within bracket new machine. So sorry, old machine. Old machine depreciation for 9 months it is 3000, and you have got the amount of how much actually? 42,900. That is by bank account 42,500, and you have incurred a loss of rupees 2,500 by profit and loss account 2,500. Now the first machine is over. 42,500 plus 2,500 is 45. 45 plus 3 is 48. You can see here 48,000 is here. So 48,000 first machinery transaction is over. Next, on that is 31/3/2016 by depreciation of the second machinery is how much actually? 4,000. Then find out the total. 85,000, 85,000, then by balance carried down, how much it is? It must be 33,000. You will just verify 0055 plus 10 85,000. So 33,000. So on 1/4/2016 to balance brought down 33,000. How many years that I have asked this one? That is show the machinery account and depreciation account for first 3 years. 1, 2, 3 years we have done, and the balance is 33,000. You can see here that 33,000 rupees here, that is 33,000, and you say in the machinery account also we have balance of 33,000. That means it is double verification, which is called the double verification. Now we will work out depreciation account. Very simple. Whatever depreciation is there, that will be transferred to profit and loss account every year. We will work out the depreciation account. Now we prepare depreciation account, that is first year 31/3/2014 to machinery account. Machinery account, it is 6,000. Then 31/3/2014 by profit and loss account 6,000. Whatever depreciation is there, that will be transferred to profit and loss account. I will show you calculations. This 6,000 is there. Now that 6,000 has been transferred to profit and loss account. Likewise, let us take the second year. Second year depreciation is 6,000 plus 3,000. It is how much actually? 9,000. So now 31/3/2015 to machinery account. Machinery account 9,000. Then 31/3/2015 by profit and loss account 9,000 transferred. Next, let us take the next year. Depreciation of the old machine is 3,000 and new machine is 4,000. 3 plus 4 is 7,000 is depreciation. That is 31/3/2016 to machinery account 7,000. 31/3/2015 by profit and loss account 7,000. That's all. So we can finish off this one like this: 7,000, 7,000. So 3 years machinery account has been done, 3 years depreciation account has been done. Now the next problem is 30th problem. On 1/1/2017, X sold goods to Y for rupees 50,000 and drew a 3 months bill to Y for the amount. Y accepted it and returned it to X. Y honored his acceptance on maturity. Pass necessary journal entries in the books of X and Y. So very simple. You have to pass journal entries in the books of both X and Y. Journal entries in the books of Mr. X. Date, particulars, ledger folio, debit, credit. On 1/1/2017, 1/1/2017, X sold goods to Y. So Y's account debtor 50,000 to sales account. To sales account 50,000. Goods sold or sold goods to Mr. Y on credit. Narration. Always you remember, narration is the brief history of the transaction. You are supposed to write narration without fail, otherwise you will lose marks. Then on the same day, he drew a bill on Y for how many months? 3 months. So he drew a bill anta helidre, that is very simple. On 1/1/2017, when he drew a bill, it becomes bills receivable account debtor. Receivable account debtor 50,000 to Y's account 50,000. Bill drawn on Y and accepted by Y. Bill drawn on Y and accepted by Y. You should see the trick here. Earlier Y account has been debited, now Y account has been credited. Now Y account is cancelled. Now it is bills receivable account debtor to sales account. That means now that sales has been converted into now what actually BR, which is called as bills of exchange, which is called as one of the negotiable instruments. Now the question here is that on the due date, why honored the bill on the maturity date? The maturity date I will show you here. I hope everyone you can see 1/1/2017. 3 months means add 3 months. Always add 3 days grace days. Always add 3 days grace days. Then the due date will be 4/4/2017. Assuming 6 months means 6 months, 3 days. 10 months means add 10 months, then 3 days grace days. Grace days as per negotiable instrument, it is mandatory. You give the 3 days what actually grace days. So due date is 4/4/2017. So the journal entry will be on 4/4/2017 that you have received cash, that is bank account debtor 50,000 to bills receivable account. Bills receivable account 50,000. 50,000. On the due date, on the due date, Y honored the bill. So journal entries are over in the books of X. Now we have to write in the books of Y. In the books of Y. Very simple. All opposite transactions. All opposite transactions. Same date 1/1/2017. Here it is purchases. Purchases account debtor 50,000 to Mr. X account 50,000. Goods purchased from X on credit. On credit. First journal entry is over. But on the same day, X drew a bill on Y, which has been accepted by Y. So 1/1/2017 that is Mr. X account debtor 50,000 to bills payable account. Bills payable account 50,000. Bill drawn by X has been accepted. Has been accepted. Bill drawn by X has been accepted. Here also you can see Mr. X, earlier it was credited, now X has been debited. Debit, credit cancelled. Now the journal entry is purchases account data to bills payable account. Now on the due date, we have already said that we are supposed to add 3 days grace days, and how many months it has been given? 3 months. So that is 4/4/2017. Bills payable account debtor. Bills payable account debtor 50,000 to bank account 50,000. Bill has been honored or paid on the due date. It is very simple. If you write 6 journal entries, you will get 12 marks. Each journal entry which has got 2 marks. So 6 into 2 is 12 marks. Very simple. You can easily earn 12 marks. Now the next problem is 31st problem. From the following balance, prepare the trading and profit loss account and balance sheet as on 31st March 2017. Machinery 8,000 asset. Cash at bank 2,000 asset. Cash in hand 1,000 asset. Wages 2,000. It is a direct expenditure which appears in trading account. Purchaser 6,000 appears in trading account. Stock on 1/4/2016 12,000. This is opening stock which appears in the trading account. Sundry debtors 8,800. It is an asset. Bills receivable 5,800 asset. Rent is an expenditure which appears in the profit and loss account because it is indirect expenditure. Legal expenses 500 is indirect expenditure which appears in profit and loss account. General expenses 1,600 is indirect expenditure which appears in profit and loss account. Bad debts 1,000. It is a loss due to debt which we could not recover from debtors. That means it is a loss. It will be taken under profit and loss account debit side. Then come to the capital, that is credit side. Capital 18,000 which appears in the balance sheet. Sales which appears in trading account credit side. Sundry creditors is an what do you call liability which appears in balance sheet. Commission received 600. It's indirect income which appears under profit and loss account. Now we will have adjustments. Try to understand what is adjustment. Anything that you could not do within the 31st of March or some entries will be done after 31st March, then they are called as adjustment. They are called as adjustment. That is why the difference between journal and journal proper. What all that you cannot write it under journal, it will be written under journal proper. So that is why journal proper is done after journal. So adjustment, stock on 31/3/2017 16,000. This is called as closing stock. Any adjustment will have double effect. Once it appears either in trading account or profit loss account and once again in balance sheet. Depreciate machinery at 10%. Prepaid rent 200. Provide PDD, provision for doubtful debts. PDD means provision for doubtful debts at 5% on debtors. Commission received in advance, rupees how much actually? 400. So anything received in advance, it cannot be treated as asset, it is called as liability. Because tomorrow's income, I cannot receive it today. If I receive it, then it becomes what actually the liability because I have to make use of only tomorrow. So now we will work out this problem, that is trading and profit and loss account. I have written first year, that is trading and profit and loss account for the year ending 31/3/2017. Particulars amount. Here I have written two columns. One is inner column, the other one is outer column. Any adjustment is there, that should be written in the inner column. Let us take the items one by one. That is I hope students you can see the question paper. Now we will prepare trading account. First always to opening stock. How much it is? Opening stock on 1/4/2016 12,000. No adjustment, direct 12,000. Then purchases. Two purchases. How much it is there? Purchases 16,000. No adjustment. Then two wages. How much it is? 2,000. Then by sales 32,000. No adjustment. Then by closing stock it is back side, it is there 16,000. 16,000. Now we will find out the gross profit or gross loss. $18,000. Let us take into now. For 18,000 is gross profit carried down or gross profit transferred to profit and loss account by gross profit brought down 18,000. Now the question here is that we have to prepare now profit and loss account. Now the profit and loss account items are there, one by one we will take. One by one we will take. Now we see 2. Take the first item. I have already explained you everything. Machinery asset, cash at bank asset, cash in hand asset, wages already been taken, purchase already been taken, stock opening stock has been taken, sundry debtors is asset, bills receivable asset, rent. Rent is how much actually? 900. Now we write rent, to rent 900 inner column you write, because you have prepaid rent of rupees 200 less prepaid 200. So outer column 700. Then after that it is to legal expenses. To legal expenses 500. Then to general expenses 1600. Then to bad debts 1000. To bad debts 1000. Then by it to depreciation on machinery, that is 10% of 8,000. 10% of 8,000 is 800. Then to PDD. PDD means provision for doubtful debts at 5%. Provision for doubtful debt at 5%. That is 5% of 8,800. 5% of 8,800. 8,800 is 440. 440. Then you have commission. By commission, write it in inner column 600 less received in advance. Received in advance, that is 400. 400. So it comes to 200. 200. Now we have entered all the items. Let us total it up and find out the net profit or net loss. It is net profit. It is 18,200. 18,200. 18,200 to net profit transfer to balance sheet. Transfer to balance sheet or capital account, it is 13,160. 13,160. Students, don't worry, I will show you after this problem. It can be still simplified. How you can write it, I will show it in the question paper how to mark, but you are not supposed to mark anything in the examination hall. That is why I tried my best to enter like this. But if you practice that at home and go to examination hall, and automatically you will write like that only, it becomes damn easy. I will show you how you should write. Now this is trading and profit and loss account. Okay, now we will prepare balance sheet. Balance sheet as on 31/3/2013. Liabilities, amount, assets, amount. I have written two columns like trading and profit loss account. One is inner column, the other one is outer column. Capital 18,000 inner column, and add net profit 13,160. 13,160, then it becomes 31,160. Sundry creditors 9,000. Then commission received in advance, 400. Then asset side, machinery inner column 8,000 less depreciation 800, outer column 7,200. Then cash in hand 2,000. Sorry, it is cash at bank. Cash in hand is 1,000. I am sorry, cash in hand is 1,000. Cash at bank is 2,000. Sorry, you can correct 1,000 and 2,000. Then sundry debtors 8,800 inner column less PDD provision for doubtful debts 440. If you minus, it becomes 8,360. Then bills receivable 5,800. Then stock, you should remember this is closing stock, always closing stock. Stock, it is 16,000. Then you have prepaid rent. Rent is 200. Then if you total it up, you will get the total 40,560. 40,560. 0, 6, 5, 4. 0, 6, 10, 13, 5, 7 plus 5 is 12, 20. 20 plus 8 is 30. It is 40,560. 40,560. So this is how you have to prepare your trading and profit and loss account as well as balance sheet. Students, I told you I will get you some small tips then how you should enter all those things. It is very simple. Machinery, asset, you write A. Then cash at bank is asset, you write A. Cash in hand is asset, you write A. Wages is an expense which appears in trading and profit loss account debit side. you write TRDR. TRDR. Purchases, it is appears in trading account debit side, you write TRDR. Then stock, always in trial balance, you will get opening stock which appears in trading account, that is TRDR. Then sundry debtors is an asset, you write A. Then bills receivable is an asset. Rent is an expenditure which appears under profit and loss account PLDR. Legal expense is an indirect expense, profit and loss account DR. General expense, again it is profit and loss account DR. Bad debt is a loss, it is appears under profit and loss account debit side. Now capital is a liability. Sales, which appears under trading account credit side. Sundry creditors is a liability. Commission received, which appears under profit and loss account credit side. If you can imagine like this, then it becomes damn easy for you to work out the problem. In this similar fashion, I will show you for the adjustment what you have to do. It is very simple. For the adjustment also it is very simple. Any adjustment should be affected twice. Then how it will be? Stock on 31/3/2017. It is 16,000. It should appear twice. Trading account credit side plus asset in the balance sheet. So 2 times. Depreciate machinery at 10%. Profit and loss account debit side plus asset minus. From the asset you are supposed to minus. Prepaid rent. Prepaid rent means it appears under profit and loss account debit side minus, and again which appears under asset side of the balance sheet A. Then provide PDD, that is called as provision for doubtful debts. Again it appears under profit and loss account debit side and again in the asset minus. Asset minus. Commission received in advance. Commission received in advance. Profit and loss account credit side minus. From the commission you have minused. Plus it appears on the liability side. Once you check this, all these things, whether it has been appeared on the same what you call account or statement, it becomes easy for you to verify. So we can follow for few problems like this. Once it enters your head, it becomes damn easy. Automatically, how I wrote like this, even you can also write like that. Okay. Now the problem number 32. Mahesh, a retail trader, keeps incomplete records. Incomplete records means it is called a single entry system of bookkeeping. The following information is available from his books of accounts. Particular 1/4/2016, 31/3/2016. Furniture 15,000, 15,000, machinery 50,000, 50,000, buildings 1 lakh, 1 lakh, stock 25, 40,000, debtors 20,000, 26,000, BR 5,000, 10,000, bills payable 10,000, 8,000, creditors 15,000, 25,000, bank loan 12,000, 10,000. During the year, he withdrew rupees 15,000 for his daughter's marriage expenses, which is called as drawings. Anything for personal is called as drawings, and invested additional capital of rupees 18,000. Adjustment: rate of bad debt rupees 1,000, prepaid salary 6,000, appreciate building by 20%, depreciate furniture at 10% per annum. Prepare statement of affairs, statement of profit or loss for the year ending 31/3/2017, revised statement of affairs as on 31/3/2017. So it's very simple. Under single entry system or incomplete records, we cannot prepare trial balance on final accounts. It will be on the other way. The difference between the assets and liability is called as what actually capital, that is called as statement of affairs. Statement of affairs looks like balance sheet, but it is not a balance sheet. Here there are two dates. Here if you take all 1/4/2016, then you will get opening capital. On 31/3/2017, when you make asset minus liability, you will get closing capital. Both the things can be done in one statement, which is called as combined statement of affairs. So let us work out first combined statement of affairs. Here it is there, combined statement of affairs. Combined statement of affairs. Liabilities 1/4/2016, 31/3/2017, assets 1/4/2016, 31/3/2017. You know that assets will have to write it on the right side and liabilities on the left side. Furniture 15,000, 15,000. Machinery 50,000, 50,000. Buildings 1 lakh, 1 lakh. Then stock 25,000, 40,000. Debtors 20,000, 26,000. BR, that is called as bills receivable, 5,000, 10,000. Then bills payable is a liability. Bills payable 10,000, 8,000. Creditors 15,000, 25,000. Bank loan 12,000, 10,000. It's very simple. We have entered all assets and liability. Assets minus liability is equal to capital. So on 1/4/2016 we are going to get opening capital. On 31/3/2017 we are going to get closing capital. So we will find out what is the total. Very simple. Total is 2,15,000, 2,41,000, 2,15,000, 2,41,000. So capital is 1,78,000 and 1,98,000. You can block it like this, which is called as balancing figure, which is called as capitals. This is opening capital, this is closing capital, which is called as combined statement of affairs. In the problem they have given statement of affairs, we have prepared combined statement of affairs. Okay, now we will prepare statement of profit or loss for the year ending 31/3/2017. Closing capital that is 1,98,000. Then add drawings. If you want to know what is that, daughter's marriage. How much? It is 15,000. Add, then you will get 2,13,000 less additional capital. It is 18,000 minus, you will get 1,95,000 which is called as adjusted closing capital. Adjusted closing capital less opening capital, less opening capital 1,78,000. Then it is called as 17,000 is called as gross profit. Gross profit. Now you have adjustments. Less expenditure or losses. Expenditures or losses. Write off bad debt. Write off bad debts. Bad debts 1,000. Depreciate furniture. Depreciate furniture by 10%. Furniture is 15,000. 10% of 15,000 is 1,500 minus 2,500. Then you will get 14,500. Then add income. Add income. Number 1, prepaid salary. Prepaid salary 6,000. 2, appreciate building by 20%. 20% of 1 lakh is 20,000. If you add, you will get 26,000 plus 14,500. It is 40,500 is net profit. Is net profit. Now we have to prepare the revised statement of closing statement of affairs. I hope you know all these items are there, which we have entered in our combined statement of affairs. The same items that we are going to take only the closing items. Furniture, furniture 15,000, write it in the inner column, less depreciation 1,500, write it in the outer column 13,500. Then machinery, no adjustment, straight away write 50,000. Then take buildings. Buildings, it is inner column you write 1 lakh, add appreciation. Add appreciation 20,000. Outer column you write 1,20,000. Then stock 40,000. Then debtors inner column 26,000. 26,000 less bad debts. Less bad debts written off 1,000. So outer column you write 25,000. Then bills receivable 10,000. Then prepaid salary, 6,000. This is on asset side. Likewise, liability side, write bills payable, how much? 8,000. Then creditors, 25,000. Then bank loan, 10,000. Then you write capital because it is statement of affairs, it is not a balance sheet. So that's why you are supposed to write capital always in the last. Capital, that is, you can say opening capital, within bracket you write opening capital 1,78,000, which you have already calculated earlier. For that, add additional capital 18,000. Add net profit 40,500. Put it in the inner column. $236,500 less drawings, that is 15,000. So write outer column 0, 0, 5, 1, 2, 2. 2,21,500. If you total it up, automatically which tallies, that is 2,64,500, 2,64,500. This is how you have to prepare your revised closing statement of affairs. Students, you need not worry about the question paper. At the end of this paper, you will find the full question paper for your reference. So you can take a printout and what actually see and calculate on your own. No problem. For every year at the end of the lesson that you are going to get that question paper, right? And those who have not subscribed for this channel, kindly subscribe and share among your friends and press the bell icon button to get continuous notification. Thank you.